As of the market close on Friday, January 23, 2026 at 4 p.m. ET, Oklo Inc. is priced at $87.59 per share. During this final session of the week, the stock experienced a downward movement of 3.67%, with a daily range stretching from a low of $86.17 to a high of $91.39. While a nearly 4% drop might feel like a setback for some, the reality is that Oklo has maintained a staggering 400% gain from its 52-week low. The tension in the market right now isn't about whether nuclear energy is the answer to the AI power crisis, but rather whether the current valuation has grown too fast for a company that is still years away from plugging its first reactor into the grid. While most retail investors are looking at the headline-grabbing partnership with Meta or the public backing from figures like Sam Altman, the real story for those of us watching the tape is the massive institutional repositioning happening behind the scenes. Just this week, Bank of America moved their price objective for Oklo up to $127, even as the stock was pulling back. This creates a fascinating contradiction. You have the retail crowd getting nervous about 5% daily swings, while the heavy hitters are treating this as a long-term infrastructure play. This isn't just a tech stock, it is a utility play dressed in a Silicon Valley hoodie. If you look at the trading volume, which hit over 9 million shares in the last session, it's clear that the smart money is looking past the 2026 volatility and focused squarely on the 2030 deployment timeline. The general expectation for Oklo stock has been that it would act as a high beta proxy for the AI trade. The logic was simple. AI needs massive amounts of electricity, data centers are running out of power, and Oklo provides small modular reactors to fill that gap. However, the reality we are seeing in the price action is much more complex. We are seeing a shift from speculative hype to a rigorous evaluation of regulatory hurdles. The market is starting to price in the fact that the Nuclear Regulatory Commission doesn't move at the speed of software updates. This realization is what caused the retreat from the 52-week high of $193.84. Investors are waking up to the nuclear winter of licensing, which is why we see such aggressive support around the $85 level. It's where the believers are drawing a line in the sand, betting that the political tailwinds for nuclear energy are now irreversible. Recent stock movement has been a roller coaster, primarily driven by the trunk nuclear nod and a series of analyst upgrades that have kept the ticker in the spotlight. Even with the recent 35% decline over the last 3 months, the one-year return sits at over 117%. This highlights the importance of using professional tools for online investing. Whether you're using the Fidelity trading platform to analyze depth or the SoFi trading platform to track social sentiment, the data shows that institutional activity remains robust despite the surface-level sell-off. We saw significant insider selling earlier this month, with the CEO offloading shares under a 10b5-1 plan. In any other sector, that might be a red flag, but in the world of high-growth energy, it's often just a necessary liquidity event after a massive run-up. When you look at the Interactive Brokers platform fees and execution data for OKLO, you see a high concentration of limit orders clustered around the $80 mark. This suggests that while the stock is being treated as a speculative vehicle on apps like the Robinhood app, more seasoned players are setting up buy-the-dip ladders. This is where the self-investing crowd often gets tripped up. They see a 3% drop on a Friday and panic sell, while the Fidelity Wealth Management accounts are likely rebalancing into the weakness. The volume followed the price down on Friday, which actually reduces some of the risk of a total collapse, as it suggests the selling pressure is exhausting itself as we approach key support levels. If you're managing your own individual brokerage account or using a robo-advisor like SoFi Robo-Advisor, you have to ask yourself, is this a trade or a decade-long hold? Oklo isn't selling a product yet, they're selling a promise of future cash flows through power purchase agreements. Their business model is actually quite brilliant. Instead of just selling the reactors, they act as the owner-operator. They want to sell the electricity and the heat directly to the end user, like a data center or an industrial plant. This creates a recurring revenue stream that looks more like a SaaS company than a traditional construction firm. They're using liquid metal fast reactor technology, which is designed to be smaller, safer, and faster to build than the massive plants of the previous century. The Aurora powerhouse, which is their flagship product, is designed to produce about 15 megawatts. To put that in perspective for your online investment strategy, that is enough to power thousands of homes or a decent-sized data center. And because they can use recycled nuclear fuel, they're essentially solving two problems at once: generating carbon-free energy and reducing nuclear waste. This is why you see such high interest in investing sites and forums. It's a compelling narrative, but narratives don't pay dividends. The reality is that the company is currently losing money, with an EBITDA that has moved further into the red as they ramp up engineering and regulatory spending. This is a classic cash burn for future dominance play, similar to what we saw with Tesla stock in its early years, or how Nvidia stock was viewed before the AI explosion. For those looking for investment help, the key is to look at the project pipeline. The deal with Meta is a massive validator. If a company with the resources of Meta is willing to sign a pre-sale agreement for power that won't be delivered until 2030, it tells you that the demand side of the equation is rock solid. The risk is entirely on the execution and regulatory side. Can they actually build these things on time and on budget? The history of nuclear power says no, but the design of small modular reactors is supposed to change that by moving construction from the field into a factory setting. This modularity is what has people comparing Oklo to the manufacturing efficiency of Apple stock. I want to hear from you on this one. Comment below how many shares of Oklo you currently hold, or if you're waiting for a specific price point to jump in. Do you think the regulatory environment has actually shifted enough to let these reactors go live by 2030? Looking at the future outlook, there are several catalysts on the horizon. Any update from the Nuclear Regulatory Commission regarding the licensing of the Aurora plant will be a massive volatility event. If they get the green light, $87 will look like a steal. If they hit another request for additional information or a stay in the process, we could easily see the stock test those December lows in the 70s again. Macroeconomic pressures are at play. As interest rates stabilize, the cost of capital for these massive infrastructure projects becomes more predictable, which is paramount for a company like Oklo. We also have to keep an eye on the broader sector. Competitors like NewScale or even the smaller players on various investing sites are all fighting for the same pool of capital and the same regulatory bandwidth. If you're using Schwab Intelligent Portfolios or other automated tools, you might find that your exposure to this sector is limited because of the very high risk label attached to OKLO. The Bollinger Bands are incredibly wide right now, indicating that we are in a period of extreme price discovery. For the self-investing individual, this is a double-edged sword. It offers the chance for outsized gains, but it requires a stomach for 10% swings in a single afternoon. When you compare this to the relatively steady climb of Fidelity ETFs or broad market indices, it becomes clear that Oklo is for the conviction part of your portfolio, not the safety part. Using the Robinhood trading platform or the SoFi trading platform to buy fractional shares of OKLO is a popular way for newer investors to get exposure without betting the house, and honestly, that's probably the smart move here. The expectation was that the Meta deal would send this to the moon, but the reality is that the market is now demanding proof of progress. We're moving out of the story phase and into the industrial phase. This is the period where the hype dies down, the game-changer buzzwords disappear, and the real work of pouring concrete and fitting pipes begins. The institutional ownership of Oklo is still relatively low compared to established utilities, which means there is a lot of room for growth as the company de-risks its technology. If and when this stock gets added to major indices, we could see a massive wave of forced buying from passive funds and Fidelity mutual funds. But we're not there yet. Right now, this is a battle between the visionaries who see a nuclear-powered AI future and the skeptics who see a company with zero revenue and a multi-billion-dollar valuation. To summarize, Oklo Inc. is currently navigating a period of intense price discovery. The gap between the $193 high and the $87 current price reflects a market that is trying to balance the massive potential of the meta deal with the cold reality of a 2030 delivery date. The tension between the expectation of a quick AI to nuclear trade and the reality of a long-term infrastructure project is creating the volatility we see today. However, for those using a Fidelity brokerage or Interactive Brokers account to build a long-term position, the fundamentals of the power crisis haven't changed. The world needs more carbon-free, 24/7 baseload power, and Oklo is one of the few companies with a credible plan to provide it. Whether you're using the Robinhood app for quick trades or Fidelity Wealth Management for a more structured approach, keep your eyes on the $85 support level. A breach below that could lead to a deeper correction, but a hold here suggests that the market has found its fair value for the current stage of development. This is a story of patience versus speculation. The expectation was a sprint. The reality is a marathon. But in the world of energy, it's the ones who finish the marathon that